So essentially what you're saying is the government hands out government bonds, and
So
then
it
the Bank of
exchanges.
England
Yeah.
comes in and buys them
Yeah, so
from the
basically,
companies.
yeah. So it's like, this is where it gets, I guess, potentially controversial, because what people might say the Bank of England is doing is financing the government directly.
Okay.
So creating new money, which is finance. So if they bought the bonds directly from the government, that would be a direct form of financing. They're essentially lending directly to the government. But what they're doing is the government sells them to the private sector first.
Okay.
And the Bank of England buys them on secondary markets off the private sector. So it's basically like a kind of a magic trick kind of shuffle, just to make it look like they're not funding the government. But that was never really the intention of quantitative easing from the beginning. Like, it's kind of changed over time. Like the idea of quantitative easing, the reason they did it was basically because after the financial crisis, interest rates were as low as they could go. There was no real means of getting banks to lend more because there's no incentive to increase your lending if interest rates can't go any lower. You can't. It's like pushing on a string. So basically, the Bank of England had to, because of the way most of our economic activity is based on bank lending, to make things happen. Basically, that's where most of our money comes from, as I imagine we might get into. The kind of principal channel with which policymakers might boost the economy is through getting banks to lend. And so they couldn't lower interest rates anymore. So they had to just create loads of money and basically capitalize the banks indirectly and get them to start lending more. Didn't really work. It has led to massive inequality. But now we're seeing potentially, during the last year, during the COVID crisis, year and a half actually,
keeps going down.
So the government has borrowed huge amounts of money to pay for all of this, and the Bank of England has at the same time been creating huge amounts of money to buy those bonds the government has issued to borrow to fund public spending. So it looks like they're basically helping the government pay for things indirectly. Their argument, or the argument people would make in favour of that, is that this is helping the government, spend more. It's like protecting the government from having a sovereign debt crisis. As like if bonds yields rise too much, that would be a problem for the government. So they're preemptively.
What would that entail?
Sorry, I mean I don't want to say sovereign bond crisis really, because a sovereign government can't, if it has its own central bank, can't default.
So I mean more specific. So you said that if the Bank of England weren't buying the government bonds, that the yield would go up too much. What does that mean in layman's terms? Yeah,
so basically government borrowing will become more expensive, right? Okay. What quantitative easing does is kind of suppress the yields by, if you increase asset prices, that automatically means a fall in the yield, as a percentage of the total asset. Basically what it means is the Bank of England making it cheaper for the government to borrow by stepping into the market and buying loads of stuff up. Okay. So increasing demand for it, lowering yields. It gets it can sound quite technical, but essentially what it is if the Bank of England didn't do that, we could have a lot higher, and the government didn't do anything else to try and mitigate that. We could have a lot higher interest on government bonds, and that could lead to all kinds of issues with financial markets, which rely on government bonds as like a key kind of building block in the financial system.
So the bond, so the yield on a bond is the interest that the government is paying on it.
Yeah. So
essentially, simple-ish terms. Yeah. Okay. So so we're basically saying that the Bank of England has the ability to just add money to their balance sheet, that they can just sort of go, well, we need £500 billion over the next 2 years. Let's just type that into their computer, and then we'll say that we've got it.
They can do that, and they have basically done that.
Hmm.
I mean, some people might say it's like an asset swap. They're essentially swapping these new central bank reserves, which are like highly liquid kind of assets, with government bonds, which are more kind of long dated. But essentially, it's creating new money. And yeah, like, so basically it puts to bed the argument that, there isn't enough money. We can't afford to pay for things because, we've run out of money, basically. Because the Bank of England can always create new money. It's not always the best idea for it to do it. That's up for people to decide. But ultimately what it throws out of the window is this idea that, there is a limit on the amount governments can spend.
Okay. So how would positive money advocate using that power better?
I mean, so it depends what like context you're talking about. So like in the last decade of austerity, pre-COVID, what we really needed was better coordination between both the government and the Bank of England. So the real problem over the last decade pre-COVID was that the government was doing austerity, so basically cutting the amount of money it was spending, and then kind of relying on the Bank of England to make up for that and to prevent the economy going into recession by doing lots of quantitative easing. So what should have been done really was kind of the government not relying on the Bank of England to use pure monetary policy, but essentially both these institutions working together to increase the amount of fiscal spending the government did. And that to make sure, is that don't do austerity, invest to fight the recession. That's what they should have done. So instead of,
it's quite classically Keynesian.
Exactly, like it's not that controversial. And instead of the Bank of England creating 445 billion as it did from 2019 to 2016, they could have done potentially much better with a lot less. So if the money was spent directly by the government. So if they gave, for instance, £50 billion to the government to spend, that money could have been spent on, investing in, tackling the climate emergency, or, investing in public services, all of those things. And the money would have actually gone to people's pockets. The problem with quantitative easing, the money stayed in the financial system. And, that money doesn't really trickle into the real economy. It just gets passed around and reinvested into financial assets. So you didn't need to create as much money to basically keep the economy going and, prevent the recession if the money was actually being spent. So you need a lot more money to have that same effect by indirectly kind of, trying to get the banks to lend more by doing quantitative easing.
Sorry. So you're essentially saying that the amount of money that was spent, and what did you say, 445 billion?
It's now like 895 billion.
Yeah, but the 445 figure I've seen, it was from, did you say 2009 to 2016?
Yeah.
Okay, so what you're saying is that amount of money is far more than would have been required to elicit the same amount of economic growth had you invested that in infrastructure, for example, rather than pumping up the asset prices that just benefits the wealthiest in our economy.
Yeah, I guess to put it this way, with quantitative easing over that period, for every pound they created, only 8 pence really seemed to make it into the real economy. So they could have achieved the same by putting 8 pence per that pound, whatever the maths works out at, about a tenth, into the real economy, and it would have had that same effect. And it wouldn't have led to increasing inequality. You'd be raising people's incomes, and you wouldn't just be inflating asset prices. So that's what they could have done. They could have, if they don't want to decide who gets the money, they could have distributed it equally to households, and that would have been fairer.
I think the figure was £6,000 per household or per person.
The full 445 billion. That they might not need to do that. That could be more inflationary. The problem a lot of central banks faced over after the financial crisis was they couldn't even get inflation up to target. So that's why they had to do so much quantitative easing, because generally after you've had a big financial crisis, there was like a tendency towards deflation. No one's lending anymore. People were just trying to like shrink their balance sheets and fix their own finances. And if everyone's doing it at the same time, the private sector does that and the government does that, you have a recession.
Thanks for making it all the way to the end of the video. Don't forget to like, share, subscribe, and leave a comment for us in the comments below. Let me know what you thought and if you'd like to see more of this from the show. Thank you, and we'll see you again next time.